Salam everyone. So in this video lecture we will cover the concept of provision for doubtful debt. So if I talk about the definition, a business must consider that some customers might not pay the amount owed by them. These debts are considered to be doubtful. Let's say we sold goods on credit to someone and we do not know if all of those customers would pay us amount in future or not. So in order to incorporate what would happen in future, the loss that would going to happen in future, we'll have to make entries for provision for doubtful debts. There's a difference between bad debts and provision for doubtful debts. Provision for doubtful debt is when you are, although it's not confirmed that the trade receivable will not be able to pay, but you are anticipating what you are expecting would happen in future. You expect that certain customers will not be able to pay us this amount in future, so you are adjusting this pre-hand only, like an advance only. This is the concept of provision for doubtful debt. And since the business does not know the exact amount or which specific receivable would not pay, so we keep an estimate for such amount in a account called provision for doubtful debt. Provision is created as per the prudence concept, because in accounting there's a concept called prudence concept, which states that whenever as an accountant we are in doubt, we should reduce the value of assets and we should reduce the value of profit. So similarly, in provision for doubtful debt, we expect that in future some trade receivables, some customers might not be able to pay, so this would result in a loss in future for the business, and hence in future our profit would reduce. Similarly, our value of trade receivable and hence as such our value of asset would also reduce. So as per the prudence concept, we have to account for this pre-hand in advance only. This is what the prudence concept says. Prudence concept basically tells us to be pessimistic and not to be optimistic, meaning whatever we think negative would happen in future, we'll have to accommodate that before only. So if I talk about the example pertaining to provision for doubtful debt, let's say if you're given policy that we maintain provision for doubtful debt at the rate of 3% per annum, at 3%, right? And let's say 2019 is our first business year, so we will be making so after we concluded the financial year of our business on 31st December 2019, we had trade receivables amounting to $20,000. From this, we think 3% of them would not be able to pay us this amount. So if I take out 3%, that would be $600. So we expect that $600 would not be received to us in future. So in order to record this, we'll have to make provision for doubtful debt. Provision for doubtful debt account. Before we jump on to provision for doubtful debt account, you should understand that provision for doubtful debt is a contra asset account, meaning that it contradicts the value of your assets. Like, how does it contradicts the value of your asset? It basically reduces the value of your assets. It reduces the value of our trade receivable, hence it is actually contradicting trade receivable. That is why this is called contra asset account. Now this contra asset account would behave opposite to an asset account. So if the balance BD of an asset comes on the debit side, the balance BD of the provision for doubtful debt account would come on the credit side. Balance BD, and similarly balance CD for this would come on the debit side. Now in balance BD, we will write provision for doubtful debt at the start of the year, at the beginning of the year, at the beginning of the financial year, and balance CD, here we will write provision for doubtful debt at the end of the year, right? So when we ended our first year, we had receivables were 20,000, and out of those we thought 600 wouldn't pay us. 600 wouldn't pay us. Since this is our first year, this is our first year of trading, so obviously we wouldn't have any balance BD previous year, because this is our first year, hence the value of balance BD would be 0. But at the end we know our provision is 600, and we'll have to balance both the sides of T accounts by plugging in the income statement, by plugging in the value of income statement. So as you can see, the credit side of the provision for doubtful debt is smaller by 600, so we will plug in 600 over here and we will write income statement. Basically the rule is, if the provision for doubtful debt increases, you record that increase in provision for doubtful debt as an expense. Increase in provision for doubtful debt is an expense in income statement, whereas decrease in provision for doubtful debt is an income in income statement. So as you can see, previously our balance was 0, and at the end our balance of provision was 600. So we can safely say our provision for doubtful debt increased by 600, and therefore because it jumped from 0 to 600, so we can say it increased by 600. And since it increased by 600, we'll have to record this increment as an expense in income statement. So we will write an expense increase in doubtful debt as 600, and this value would come here for income statement. Now if I talk about the second year, we'll have this balance BD 600. Balance BD 600 on 1st January 2020. This was 1st January 2019, 31st December 2019, 31st December 2019. So since now 2020 is our second financial year, we have already got provision from previous year as 600. We already have got provision as 600. Now what will we have to do is, now our receivables have become, the value of our receivables had become, in second year it's 30,000. So if you take out 3% of 30,000, it would be 900. So as I told you, here balance BD is provision at start. So at the start of the year our provision was 600, so we already got this from previous year. But at the end of the financial year, our provision has become 900. So this would be balance CD. Now whatever the difference on either of the side would be written as income statement. So we can clearly see our credit side is smaller and our debit side is bigger. So the total here is 900. We will also make 900 here, and the difference would come as an income statement. So we'll have to plug in 300 into the income statement. So we can safely say, since our provision for doubtful debt was 600 at the start of the year and 900 at the end of the year, so it increased by 300. So this 300, as you can see, is an expense in income statement, when we make it on 31st December 2020, right? But now if I talk about third year, I'll remove certain things from here. Now if I talk about third year, so balance BD for third year would be 900, 1st January 2021, and on 31st December 2021. Now at the end of the 2021, we have got trade receivables worth 25,000. Now if you take out 3% of 25,000, that would be how much? 750. So our provision at the year end has become 750. So this is balance CD. Now you can clearly see which side is smaller. Our debit side is smaller by how much? 900 minus 750 is 150, so we will write income statement over here. 31st December 2021. And if we make income statement, we can see our provision for doubtful debt was 900 at the start of the year, then it became 750. So you can clearly see our provision reduced by 150, and reduction in provision is an income. Reduction in provision is an income in income statement. We will treat it as an income in our income statement. So what we have to say is that if it results into a decrease and an income, the value of income statement would come on debit side. And if it results into an increase and an expense for the income statement, the value of that expense or increase would come on the credit side, as you can see here as well and here as well. In first and second year, our provision was increasing, therefore the value of income statement is coming on the credit side. Whereas in the third year, our provision was decreasing by 150, so that is where the value of income statement is coming on the debit side. So this is how the provision for doubtful debt account would look like. Thank you. Just to elaborate further on the account of provision for doubtful debt, so we'll basically summarize this video into this account. So provision for doubtful balance BD would come on this side because this is a contra asset account, and you know this reflects provision at start. And balance CD would come here, which is provision at end. And in case if the provision is increasing, meaning to say, like if the provision at the start was 1500 and at the end it was 2000, so it means the provision had increased by 500. So in case if the provision is increasing, the value of increase would come here by the name of income statement. And if this value of provision is decreasing, in case increasing, and if the value of provision is decreasing, the value of income statement would come here. So this is the format that you need to remember for the provision for doubtful debt. Thank you.